Hey, what's going on, you guys? My name is Carson Rouse, and welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. Today, I'm going to be talking through the specifics of how sports betting and your gambling winnings are taxed. Super Bowl 55 is right around the corner, and I'm telling you, people are excited. It's the Buccaneers versus the Chiefs, Brady versus Mahomes, and the old GOAT versus the new GOAT. This is truly a poetic Super Bowl that should turn out to be a great matchup, and that's why this year might be the year where we see insane off-the-charts gambling numbers. So yeah, it's no secret that gambling actually plays a huge part in the overall economy, and different organizations like the NFL were actually originally created for, or at least have their roots embedded in, gambling. Generally speaking, around $5 billion is the average amount wagered on a Super Bowl the past few years. These numbers have been steadily rising as well. Back in the 1970s, usually no more than $100 million would be wagered on the big game. In fact, this year alone, a man by the name of Jim Mickingvale bet $3.4 million on the Buccaneers to cover the spread. He's just a mattress store owner who's like betting his life savings on a game. Now, if the Buccaneers cover the spread, that $3.4 million will be basically doubled into nearly $7 million. Now, if the Buccaneers and Tom Brady fails and they don't cover the spread, he's out all of that money. Keep in mind though, even if he does win, a lot of that is going to be taxed. So let's get into what needs to be taxed in gambling and just the specifics of how you've got to pay it and how it all works. First of all, if you actually go to like a physical sports betting facility, they will actually give you a tax form to be used for the upcoming season on your winnings. They are legally required to do so. This form is known as a W-2G and is only sent to you if you have a total net profit of over $600. And oftentimes, if you are paid out in cash, facilities will often withhold at least 24% of it for federal taxes. Now, if you win money on an online gambling site, which is what most people use now, they are legally required to send you a 1099 MISC form. Now, once again, they only send you this if you have a net profit above $600 for the year. But keep in mind, even if you have gambling winnings off the record, you are still legally required to include it as another source of income on your taxes. But what Uncle Sam doesn't know won't hurt him. All of the money that you profit from gambling will be taxed regularly along with your current tax bracket and your filing status. Now keep in mind that your gambling winnings will, of course, count along with your other income and could move some of that money into a higher tax bracket. So if you're making 40 grand a year and you have $5,000 of gambling winnings, a lot of that extra money that you won will be taxed at a higher percentage. Now let's talk about gambling tax deductions. Here's what you really need to know about gambling. So losing money really sucks, but it's one of those things that's basically bound to happen in gambling eventually for you. At least one of the years of your life, you're going to lose money in gambling. In fact, you're probably going to lose a lot of money. Luckily though, you can claim some of your gambling losses as a tax deduction. What a tax deduction basically is that it reduces the amount of income that you have to pay taxes on. For example, let's say you made $5,000 in 1 year. I would probably try to increase your income, but let's just go with that. You made $5,000, you would pay $500 in taxes. But if you made $5,000 and you had $1,000 tax deduction, you would only pay $400 in taxes. When it comes to gambling, you are allowed to claim all of your losses as deductions other than the losses that exceed how much you won. For example, if you won $4,000 from gambling that year, but you lost $3,000, you're allowed to deduct the $3,000 of losses from your taxes. However, if you won $4,000 that year and you lost $10,000, it doesn't matter. The max that you can deduct is however much you won. So that would be $4,000 that you can deduct from your taxable income. The other $6,000 means nothing. You lost it and it's not deductible. It's just a big fat loss. This is different from stock market losses where you can basically deduct as much as you want to a certain extent. So this would tell me that if you want to gamble, maybe gambling in the stock market would be a little better because at least it has better tax benefits when you lose for the most part. Now, there are a few things you need to keep track of to be able to deduct this money. You got to keep track of the date and time when you won or lost the money. You got to keep track of the place that you were gambling, and you got to keep track of even stuff like who you were gambling with. I don't know, the IRS is a little creepy and they want to know this stuff. But anyway, I'm very excited for this year's Super Bowl, but don't gamble too much money because remember, not all of it is tax deductible. Anyway, go Buccaneers, that's what I'm rooting for. Thank you guys for watching, and I will see you next time.